Hello everyone, welcome to this week's live stream. If you haven't attended these before, I normally run them every Friday at 2:30 UK time, just as US markets are opening. And in the session, what we'll do, we'll have a look at the major announcements due out next week that markets are watching, and we'll go through some of the major markets to see what's interesting and where there might be some trades. So we'll take a look at the usual bunch of stock market indices, commodities, oil, gold, some of the FX pairs, and Bitcoin. So we'll have a look at all of that stuff. It's been an interesting week. Obviously, we've had the US interest rate decision this week, the first cut in US interest rates in 4 years. So we had plenty of volatility off that. We have seen in stock markets, here's the interest rate here on Wednesday evening. We've seen the S&P and the Dow both push out to fresh all-time highs. And I must admit, I wouldn't have been thinking that if we wound back about 5 or 6 weeks to August, where we saw such a steep sell-off for stock markets back then. But there's the S&P and there's the Dow up at fresh all-time highs yesterday. So it's been a good week for day trading. I'll talk a bit more about day trading as we go through this. We had a big level held since Monday. The Monday lows weren't taken out at all, and we did see them tested on Tuesday and on Wednesday before the market really took off yesterday. But more of this when we look at the markets. And of course, once I've looked at the markets, if there's any stuff you want looking at, just put it in the chat and we'll take a look at it then. All right, let's just do a risk warning first of all. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. I did a day trading webinar just over a week ago for those people in the WhatsApp group. And I'm probably a lot more active than I used to be in terms of day trading US indices, S&P and NASDAQ. So in the session, I went through the trading setups I look for. I've got a couple of simple ones: where to place stop losses, where I think about taking profits, the low risk, high reward, false break approach, and when not to trade, which is as much a trading decision as clicking buy or sell. So the recording of that is available. If you want to see it, if you're in the WhatsApp group, you've got access to it, but you can join the WhatsApp group, try it out for a month and get access to that webinar, and I'll give you details further into today. But let's take a look at the major stuff for next week. So Tuesday, Australian interest rate decision next week. It's been a big week for interest rates, and the big one this week obviously is the US. We had the UK decision yesterday. Not much volatility off the back of that. And next we've got the Aussie interest rate. Again, probably not too exciting. Thursday we've got US GDP. So how well or not is the US economy doing? And then on Friday we've got probably the big one for next week is the core personal consumer expenditure number, which is the US Federal Reserve, the central bank's preferred measure for inflation. So that's a big one next Friday. I think that's the one to watch next week. But let's jump into markets. We'll come back to all of this in a sec. Let's jump into markets. Let's start off with stock markets. It's been a good couple of weeks for me trading indices, and here we are on the S&P. If we take these off for now. This is where we are. So as of yesterday, we saw fresh all-time highs in the S&P 500. We had that big sell-off from late July. Dropped about 10%. The market dropped into early August. It's bounced back. It's bounced back much stronger than I thought it would. But here we are at fresh all-time highs yesterday. So for now, I would just be a buyer of the dip. The big trend is up. If we go back to the latest bit of the trend from October 22, that trend is definitely up. If I take it off that level, it doesn't really matter, and it's accelerated since then. And this is where we are now. and that trend is up. So for me, any weakness in the S&P, I would still be a buyer. There's not too much we can get, I don't think, from the RSI at the moment. All right, it is nudging near oversold. You know, when it was up here last time round in August, we did see the market stutter a bit and sell off for about a week. So maybe there'll be a bit of a sell-off going into next week and perhaps an opportunity there. But it has been really resilient. Of course, if you thought, well, actually, the move over the last couple of days, because of the US interest rate decision, is a bit of a false one, then it's the perfect opportunity to go short. You know, sell short with a stop above, I don't know, yesterday's high, let's say 57.50, and see where the market goes. You know, but I have been surprised by how strong this market has been. I bought it again yesterday. Let's see what happens. But you know, real strength in stock markets again over the last few days in US stock markets. The Nasdaq has been lagging a bit. The Nasdaq hasn't made fresh all-time highs. The Nasdaq's all-time high was in July, and was still about 1,800 to 1,000 points below that. This 20,000 level might be interesting. You know, it was a problem back here in August, and it's sort of stuttering again around here again. So again, you know, considering the strength we had yesterday and the run that we've had for much of this month, perhaps it's a bit vulnerable to a correction. But, you know, I'd much rather be trying to buy the dips because the big trends are up, rather than trying to call the tops still in these markets. So that's the Nasdaq, still positive for me. The Dow, again, you know, all-time highs yesterday. The market in the last, the last week or so, week and a half, has gained about 5% from 40,000 up to 42,000. You know, it's been a good trend all the way up. So at the moment, I wouldn't be betting that trend is over. You know, I'd still be looking to trade with the trend. So let's see what happens. But for me, stock markets continue to be a big focus. I mean, the FTSE, a little bit different as ever. You know, the UK FTSE 100, the trend is still up on that one. The last time we saw sort of new highs in the FTSE is back in May, and it's all been a bit sideways and a bit chop since then. So not too much for me in that one at the moment, to be honest, the FTSE. I'd rather be a buyer of the dip at the moment in the FTSE, but nothing really jumping out for me on that. I thought the DAX was interesting. The German market was interesting today, and perhaps for the rest of the day. You know, we had, again, all-time highs for the DAX in May. It poked through again in early September, and again yesterday. You know, but it can't really get through here so far. You know, this 18,900 level. You know, it's struggling to make much progress through there so far. So I'd still be the buyer of the dip. But again, you know, as is often the case in markets, there are always two arguments, aren't there? And if you thought, well, look, the market has been running out of steam up here for 4 months now. If you want to go short the DAX, again, I think there's a logical place to put the stop up somewhere above yesterday's high. What was yesterday's high? 19,050. So let's say, I don't know, 19,100. If you thought we were going to see a bigger sell-off for the DAX here. So, yeah, I think that's interesting to see what happens. At the moment, in the short term, I'd rather be a buyer of the dip, looking at the trend over the last week and a half. Let's see if we see some strength coming in today or early next week. The Nikkei, Japan 225. Again, quite a good bounce back. The big trend is up, going back to 2023. That was the massive sell-off in the Nikkei. You know, we saw all stock markets hit, but the Nikkei was hit particularly hard from July, from 42,000 down to 30. You know, 30% drop in less than a month. It's bounced back from that. So again, I'd probably rather be a buyer of the dip. But for me, the focus continues to be US stock markets. You know, that's really where my day starts properly, to be honest, is in the afternoon for me in the UK when the US markets open. So let's see what happens with these. But, you know, with the market at all-time highs, anybody who's bought the S&P at any point in its history and still holds it has made a profit as of yesterday. So is this the top? It could be, but I would say at the moment, no, in my opinion. So I'm quite happy to still buy the dips on the S&P. So let's see what happens. Dollar index. I am short the dollar index and I'm slightly in profit, but it's been a bit scrappy overall. Clearly, quite a bit of volatility this week with that interest rate decision in the US. And I've been short since, I don't know, up here somewhere. And there are arguments for being long or short at the moment. You know, it's very rare that there's only an argument for being long or short in a market. I think, you know, you could take the view, well, broadly speaking, the dollar index for the last 12 months has been sideways. The bottom of the range from July 2023 is down here at 99.50. So if the market's going to turn around from anywhere, then here we are. So that's the argument for being long the dollar. Perfectly sensible argument. And then the short argument, so I'm short, is the trend has been down for the past not quite 3 months, 2.5 months or so. But it hasn't really broken lower this week. We had a lot of volatility over the interest rate announcement, but we haven't broken lower. So maybe it is going to turn around from down here. I don't know. I'm still short for now. I'm happy to stay short. But something of an inconclusive September, I think I would say, for the dollar index. So let's take a look at some other things. Pound against the dollar. This is at a 2-year high. Here we go. Pound against the dollar is a 2-year high. Continuing that trend. So we're back up where we were in March 2022. So I traded it a bit on the way up here. I don't have a trade on at the moment. But again, in pound against the dollar, I would be a buyer. I'd be a buyer of the dip. You know, if you look at the big trend since April, looks something like that. It's broken out to this 2-year high the last 2 or 3 days or so. So I'd still be a buyer of the dip. You know, and if I was looking at levels for next week, you know, we did have the lows from earlier this week around 130, 150, held the market up. So I'd still be a buyer of the dip in that one. But again, clearly, so much depends what happens with the US dollar. But let's take a look at gold. You know, talking about markets that are hitting fresh all-time highs. Here's the gold price. So gold, you know, we have been seeing all-time highs on a fairly regular basis in recent months for gold. It started in July when it broke out through the previous all-time high from May. A bit of back and forth, and then it pushed higher again into August, and again another all-time high in September. And here we are again yesterday, another all-time high. So again, you know, for gold, I'd be a buyer of the dip. I want to go with the trends. You know, if we did see a resurgence in strength for the US dollar next week, then that would, I would have thought, put some pressure on the price of gold. But for now, you know, I can't argue with the trend. So I'd like to be a buyer. If I was a buyer, the closest I would want my stop at the moment, I think an aggressive stop for me, the other side of 2540, 2,540. If it sells off back down to 2,500, it looks like an interesting trade because we spent a bit of time down here in late August before zooming up to where it is now. So for gold, I would still be a buyer of the dip on that one. Silver, I think, is always a little bit different. You know, it's not at all-time highs. We did have a multi-year high in May, up at $32 and a bit. So best levels in more than 10 years. I don't know what I'd do. I mean, the time to buy silver is the hindsight trade. Go back in the time machine to early August, you know, when it came back to this 26 area. Up here, I don't know. There isn't a trade for me in silver up here. Obviously, the trend over the last couple of weeks or so has been up. So on that time frame, I'd be a buyer of the dip. I just think it's a harder one to call from a daily chart point of view, because we have seen this whole 3180 to 3250 area be a problem. So I'm not quite as convinced on silver as I am with gold. So let's see what happens there. And obviously, you know, some of these other metals with a bit of dollar weakness, you know, copper has been an interesting one. Copper hit all-time highs in May and then dropped about, well, more than 20% into the August low. The trend for copper is still up, bang, bang, bang. So that's still going. And it has bounced, you know, so again, I'd be a buyer of copper. And at the moment, I would want my stop at least the other side of that August low. So there's lots going on in some of these other markets. Palladium, I talked about this a bit in the WhatsApp group. earlier in the week. I think it's an interesting market to watch next week, palladium. I mean, the big trend for palladium, I remember trading it way back here in 2018, and it was a great market because it just felt like it went up every day. And then with this explosive run into COVID, and then absolutely massive volatility. But with palladium, since March 22, it's just been sliding. All right, we've had a good rally since August in palladium, but is it just another opportunity to sell? Because every rally we've had in the last couple of years has come to nothing. So I think that's interesting, you know. So probably if I had to do a trade on palladium at the moment, what would I do? I'd probably go short with a stop at 11.50. I think it's interesting next week to see, does it have another go at these old highs just above 1100? But for now, you know, it's had a great run, definitely, over the last month or so. But we've seen the odd good run over the years, and it ends up coming to nothing. So I think it's an interesting market to watch going into next week. Oil, I'm currently short oil. Haven't quite been stopped out on oil, but I'm short oil at the moment. This is another one, a bit like the US dollar, you know, where you could argue both ways here. You know, the argument for being a buyer of oil is, well, it's at the bottom of the recent range. You know, if we say that oil has been in a sideways range for the last 18 months, these $65 lows, $65 a barrel, have been a real floor for oil. They've held the price up. We've seen the price rally, blah, blah, blah. So that's the argument for being a buyer of oil down here. I'm short because the trend since whenever, July, has been down. So that's my argument for being short oil at the moment, going with that trend. Let's see. I think there are a few markets anyway, to me at the moment, where you know you can make a case for being a buyer or a seller, and it's perhaps a bit tricky, a bit trickier than it is usually. But there's oil. So it's had a good run over the last week or so. Let's see what happens with oil. You know, do we see it shake off this correction next week and push higher? Or is it going to have a trip all the way back down to 65? I hope it's the latter, but we'll see. We'll see how it all works out. Natural gas, it had been having a good run. Really good run in natural gas. Off these lows at the end of August, down around 185. Trades as high as almost 240 on Tuesday of this week. So again, what's that, a 30% move nearly in natural gas in about 3 weeks. And then it's sold off since then. I mean, I would still be tempted to be a buyer of natural gas in the short term. You know, it's all been a bit sideways the last couple of days. I mean, it's interesting. Does this 240 level from July end up being a problem? I don't know. Let's see. But for now, I'd probably be inclined to be a buyer rather than a seller of natural gas. What else? What else have we done? What haven't we done? Bitcoin. Let's have a look at Bitcoin. It has been a bit boring, Bitcoin, lately. Let's see. It's still, you know, again, it's one of these ones. We've had a good couple of weeks or so, but overall, it's not done anything since March. You know, it's just drifting, isn't it? So there's an argument. There's an argument to be a seller of Bitcoin. You know, we had the highs in late August at 65,000. Here it is trading just below 63 at the moment. So there's an argument to be a seller to see if we see the low 50s tested again. The big trend on Bitcoin is absolutely up. You know, going back to whenever that was, November 22. The big trend is up since then. We just haven't seen that much going on since March. So that's it. That's it, really. So for me, you know, the interesting markets for next week, definitely stock markets, because we had the interest rate cut. We've had that big move up. All-time highs in the S&P and the Dow. What does that mean? You know, are we going to see, is this the start of a new trend higher? You know, traditionally, a market making fresh all-time highs is bullish. Let's see. Or is it just a false little fiddly breakout and bang, the market turns? Because if we go back, again, it was something I was doing, you know, in a WhatsApp group earlier this week. We had a quick look at what the market top looked like last time round. And actually not dissimilar to what's going on now. You know, the last major turning point on the upside in the S&P was in January 22. And back in January 22, trend. This is the daily chart. Makes a fresh all-time high. That's in December 2021. And then just turns, and then sells off and then drops about 25% over the next 6 to 7 months or so. So, usually all-time highs, like all of these, are bullish. But of course, there comes a point where the all-time high, the new all-time high, is the all-time high for a while and the market turns. So, and we only ever know that with hindsight. But I think it is interesting, what's going on in stock markets up at these levels. Let's see what next week brings. But I think there could be some good trading opportunities, potentially in both directions in US indices, if we do see them come under pressure. I am long at the moment with the stop loss in place. Let's see what happens next week. I think that's interesting. The dollar index, because I think even though we've had plenty of volatility, we've had no real direction for about 3 weeks now in the dollar index. So does this mean it's making a base, or does this mean it's just having a little bit of a pause before it lurches lower? Let's see. And gold, because it's making all-time highs. Even though the dollar isn't moving that much, so gold isn't being helped so much by the dollar, because it's not like the dollar's weakened a lot over the last couple of weeks. But gold is out to fresh all-time highs. So again, it suggests there is some appetite for gold out there. So yeah, some interesting markets to watch next week, even though lots of stuff looks a little bit choppy at the moment. So what I'll do now, I'll look at the stuff you want to talk about. But if you want to access that day trading webinar that I ran for those in the WhatsApp group a week yesterday, all you need to do is join the WhatsApp group. And in the WhatsApp group, I do a daily update, markets I'm looking at, markets I'm watching, trades I'm running, an update in the afternoon when the US markets open of levels I'm looking at for that. So a whole load of stuff. Q&A, any questions during the day can be fired in, and I'll always try and answer them. And if you sign up on my website, the link is in the description, and use the code YouTube, you get 20% off the first month, and you get access to that webinar recording. And that's it. And it's only a monthly commitment. So if you think it's not for you, then you're only committed for a month. Most people stay for more than a month. I think typically it's at least 6 months is the typical period. But yeah, have a look and see, and use the code YouTube. And that's what a typical update looks at. So normally I'll talk about 4 or 5 markets in the morning, and then look at the US markets in a bit more depth in the afternoon. So if you do that and try and sign up, you can get access to that day trading webinar. All the details is on the website, davidjonestrading.co.uk. Any questions, drop me an email. My email address is dj@davidjonestrading.co.uk, which should also be in the link. And finally, to find out who I trade with, I trade with them because it's tight spreads, no frills, tight spreads. You can trade through TradingView. If you go to bit.ly/DavidTrade, you can try that broker out, and again, see what you think. Okay, that's it. Let's have a look. Let's have a look at some of the stuff you want looking at. So just have a quick look at what these US markets are doing. It's a bit chop at the moment, aren't they? There's not a lot going on. Can we have a look at dollar yen and sterling yen? Yeah, let's have a look at dollar yen. I thought dollar yen was going to be a buy at some point, and I wonder if I've missed it. Let's have a look. Maybe not. Maybe there's still an opportunity next week. Let's just get rid of some of this stuff. We saw the big sell-off in the dollar against the yen from July, and this level was obviously a big level. It was the low, not quite the low for the year, but the low at the end of last year, around about 140. And we have seen the buyers come back in, after a big old fall of, 2,200 point fall. We have seen some support at 140, but I still think there's maybe potential there to be a bit patient, because if we looked on the hourlies, you could absolutely argue that trend is still down in dollar yen, particularly if we look back up to here, whenever that was. There we go. Going back to mid-August. So, you could absolutely argue to be a seller of the dollar against the yen with a stop, I don't know, the other side of 146. Maybe. So maybe there'll be another test next week of 140. So short term, I'd be a seller. Medium term, I'd be wondering, is it going to make a base here? Which is quite similar to my view on the dollar index. That's what I'd be thinking with dollar yen. Sterling yen, GBP, JPY. Let's have a look at that one. So sterling yen. So this is the pound against the yen. I would say the trend is still up. We're again big slide in sterling yen from July. If I was a buyer now, where would my stop loss go? To be honest, I would still want it at least the other side of 184. So perhaps it's a bit of a wait and see market for me at the moment. If I was buying it in the short term, I'd go the other side of 188. So I'd be a buyer of sterling yen. It's just, do I buy now, or do I try and be a little bit patient and see if we get another pullback to the low or the mid 180s, and perhaps there's a trade there. Canada, Japanese yen. Oh, the yen is popular today. What did you say? Perfect rejection on the daily trend line. Let's have a look. What's the daily trend line? So if I was picking on, this is a big trend from here. Are we saying that? There we go. Like a textbook little bounce off the trend line. Yeah. And again, with this dollar yen, sterling yen, this one, Canadian dollar against the yen, I would be a buyer. And if I was a buyer of that one, then I would want my stop probably the other side of this spike low. What's the spike low? 5th of August, 101.60. So interesting to see if we do see these currencies, the dollar, sterling and the Canadian dollar, make a big comeback against the Japanese yen into the year end, or do we see these levels taken out? For now, like I say, I'd be a buyer of that and the others. But I think it should be an interesting few months for these markets that are these currencies against the yen. Next question: Wouldn't also cutting interest rates by 50 basis points cause inflation? More companies would borrow the money to employ people getting raises. Maybe. I tend not to think about it too much, to be honest. I just want to focus on what's going on in the market. So I tend not to think about that. Plus, the Feds kind of said they might not be interested in cutting again. Well, let's see. I think maybe that's a reason why we haven't seen the dollar hit as much as we might have expected. Because if the Fed has signaled, then that's our lot for a while. Then perhaps that's another argument for the US dollar to make a base here. I think for me, if you've watched any of the stuff I do, I'm very much price driven, trend driven. So I tend not to try and second guess it. But given it was a reasonably sizable cut, we could have expected, some might have expected, the US dollar to fall more than it did, and it didn't. So is it already been? That's already priced in now. And particularly if they're not going to cut again for a while, perhaps you will see a dollar turnaround. I don't know. Let's see. Let's see what happens. Otherwise, if that's all the questions, I think we're done. We're going to wrap it up. I'm not going to be here next Friday. I'm away next Friday. So the next live stream will be in a couple of weeks' time. I'll try and get out a couple of videos in the meantime. But to get daily updates, throughout the day, just join the WhatsApp group. Try that. You'll get access to that webinar. Then I talk through my day trading approach. Just go to the website. The link is in the description, and use the code YouTube to sign up, and you can join doing that. Any questions, drop me an email, dj@davidjonestrading.co.uk. Otherwise, we will wrap things up there, and I think it will be interesting to see where US stock markets finish the week. After a big day yesterday, I would absolutely be a buyer of the dip today, and the closest I would have my stop is the other side of yesterday's low. So I think if we get a bigger sell-off in US markets this afternoon, there could be an opportunity. But let's see. Okay, we'll wrap it up there. Have a good week, and see you in a couple of weeks.